Hey, what's up, guys? John here. We're seeing some very interesting things right now in the stock market and overall economy. So tomorrow, the inflation numbers are going to be coming out, and these inflation numbers, people are very anxious about. But most Americans think that the Fed does not have full control over the market. They think that this is basically out of control. And I'm kind of on the sidelines looking at this, looking at, a couple key factors. Right now, the average American has a whopping debt of $91,589. The average taxpayer, their debt $242,000. National debt $30 trillion. Right? You start looking at some of the debts that we have in the last couple of years. What have people done? They've simply just accumulated more and more and more debt because borrowing money was very cheap. It was accessible. People felt like they were on the top of the world, right? Everything was just going up. Stocks, crypto, real estate, everything. But now we're seeing, 20% of all home sellers starting to reduce their home prices. Crypto's falling. We're starting to see stocks fall, right? We're seeing more fear. What I think we're going to be seeing coming very soon, we're kind of seeing it now, but I think over the next couple months is people, 45, 50 and up are going to start looking at retirement saying, what, can I risk it? What if inflation continues at this rate? If it does, am I going to put myself in a position where I'm going to be, working a drive-through at 75 years old, right? They're going to start really looking at risk differently because the world's very uncertain. We've all come to learn that. And what I think is happening at the same time is we're seeing gas prices continue to rise. And as that happens, we're going to see costs rise, right? Whether it be transportation costs, manufacturing costs, all costs, which are then only going to be pushed to the consumer, which is me and you, right? So we're going to be paying higher and higher cost. So if they are going on this mission to combat inflation, what are they going to be doing? They're going to increase the cost in which it is for us to borrow money to buy items. So it's going to be reducing our purchasing power and what liquidity we do have. It's going to cost more for us to actually go out there and purchase items, right? So what is this going to mean? How is this going to resonate with the economy? I think what we're going to see is we're going to see more people filing bankruptcy over the next 6 months than ever before, mainly because people aren't going to be able to justify the payments. They're not going to have the money to make the payments as rates rise. And we're starting to see another situation unfold too, is like massive layoffs. We're seeing a lot of big corporations, but also big, medium and small size businesses are doing layoffs as well. Whether it be, the local deli or Meta or, Twitter or Tesla or Carvana or Netflix or any of these other corporations, they're laying off, in large scale. We're seeing mortgage companies, even Wells Fargo, Better.com, a lot of big banks are laying mortgage lenders off as well. What I think is going to happen here is I think that they are going to try to go aggressively to increase rates. They're going to be doing this, and I think this is going to have a profound impact on the real estate market. Europe right now, they're increasing rates 25 basis points starting in July, and that's the first hike they've had in a decade. Now, what I think is happening here with Europe is going to be very interesting because Europe, as their debt loads pick up, they're also getting weaned off of Russian fossil fuels. So their costs are going to be going up. Inflation is going to continue to run rampant. And I think we're going to see inflation globally get out of control over the next 6 months to a year to 2 years. Look at Argentina, inflation's like 60%. Turkey, it's 70% year to date. There's so many countries right now that are all double-digit inflation. And America, I believe, is one of them. So as this continues to soar and wages just remain flat and job opportunities start getting sucked out of the market, we start moving into more of an environment with outsourcing where people are hiring remote work. All this is going to do is take away opportunity for Americans. I believe what we are going to be seeing, though, is a once-in-a-lifetime opportunity to invest money. That's what I talk about on this channel is personal finance, real estate, business, and money. And, lately I've been sharing some of the truth about the economy. I'm very bearish on this economy because to me, I think that this economy is a house of cards and we're not really seeing a true economy. The stock market would not be where it is right now if we were in a real economy. We're in an economy where we just printed a ton of money. We removed all type of responsibility for Americans to pay for most debts over the last couple of years. A lot of them have come back now. Most debts are due again. But we are stepping into uncharted territory. This economy, I think, is not what most people think it is. And I think over the next 6 months to 12 months, more people are going to become more aware of that. So my advice to everyone right now, when we get these numbers tomorrow, you may believe it or not believe the numbers in which they provide us. But one thing that you should believe is that uncertainty is ahead. You want to have very low debts If you do have debt, you want them to be fixed rate debt. You don't want to step into an adjustable, in my opinion, an adjustable rate going into the future over the next 6 months, 12 months, a year, 2 years, 3 years. You don't want to do that, because if rates continue to rise, you're going to be in trouble, right? So get fixed rate debt. Make sure you are reducing your costs. I would personally sell any items that you don't personally need. Try to get cash heavy. In an inflationary environment, you may say, John, why would I get cash heavy if the dollar is dying or depreciating? Well, you'd want to be cash heavy because most people, they pay their debts in cash. And if people are putting themselves in a position to where they can't make payments, then you might start to see some big opportunities. People might have to fire sale items. They might sell that luxury watch you want, maybe that car that you wanted, maybe that piece of land or that property that you want. People might have to start fire selling things. And if you have the cash and the credit, you're able to go out there and acquire these properties, these assets. So this is the moment where you want to study, you want to really get a good game plan, because these opportunities that we're in right now, I mean, think about this. Since 2008, 2009, right? It's been 13 years. We've basically been on a complete rocket ship to the moon the last 13 years. People don't remember what a 2008 looked like. Especially a lot of the young people today on social media. I got into real estate in 2008. That was like right when I first got in. And I learned so much from all the people that I was working with, mainly, investors and people that they educated me on leverage. They educated me on a lot of things. And I also saw a lot of people lose everything, right? And you start to see fear in the eyes of people that lose everything after they just went through a big bull run. And I think right now, a lot of the people, they don't remember what a bear market looked like. They have no idea what it looked like. There's normally only one way up. People think with stocks and crypto and real estate, it's just up, 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 double-digit returns. This is not normal, right? And so as we start to get pulled back into reality, we're going to see real panic. I think we're going to see people really just start fire selling things. I really do, as uncertainty kind of continues to increase. And I ask myself, what are the best investments? What are the best opportunities? For me, I'm studying all these different markets. I'm looking at things all over the world. I'm paying close attention. I've not yet made any substantial investments, this month or, in the last month. I'm really cautious because I think that we're going to start to see opportunities present themselves at levels that make more sense. Right now, we're seeing record valuations across the board. Like in the real estate market, it makes very little sense for me. I'm in Florida to run out there and buy a property. Even though I purchased something here, a couple months ago, I got an incredible deal on it. And it's not really an investment, in my opinion. It's just a way for which I don't have to pay these ridiculous rents in Florida. But if the market drops here, I don't really care, right? Because the value in which I pay for this property, it doesn't really matter. So what I think is going to happen, though, in Florida, big changes, and insurance-wise, debt-wise. People are not going to be able to hold on to these assets. People are spending, they're paying 50 to 60% more for a property here, same property that was trading 3 years ago, 4 years ago. This makes no sense, right? All this is going to get pulled down back to reality as insurance costs rise, cost of living rises, gas prices, everything's going up, up, up. And we start to see fear set in with these interest rates increasing. So I think we're going to see big changes in the inflation numbers going forward if we actually are presented with the right info. And I think we're going to see real smart, savvy investors shine. I think we're going to see a lot of the people that pretend like they know all the answers. A lot of people are going to start to get wiped out that are over leveraged. So especially a lot of real estate people, a lot of people that are they have 85% loan to values on their properties. They're just leveraging everything to the gills, getting as much cash because they're so concerned about inflation, buying more and more and more, and it's like a house of cards. Those people, you might want to watch, because those people are probably going to be losing a lot of properties. There's going to be opportunities to buy. I've learned one thing from a very smart, he kind of grew to be a friend of mine in real estate. He was a real estate investor in Beverly Hills. I was an agent there for a decade, and he was trying to buy a hotel in Orange County. This hotel was for $36 million. He's from a very well-to-do family, and he didn't buy the property because the property he thought was overpriced. He waited, and they ended up buying it for $18.5 or $19 million when the market tanked because the other buyer overpaid for it. You have to have the patience and the wherewithal to know when to buy and when not to buy. And right now, I think it's a great time to just stack cash and just wait for that opportunity to buy, because it's coming. What do you think about this entire situation? Drop your comments below. Hit the like button, subscribe. Also subscribe to my second YouTube channel. It's going to be an interactive call-in show podcast. It's going to be really cool. I'm going to have some really cool guests on as well. I'm really looking forward to it. And also LinkedIn, Twitter, TikTok, Instagram, everything's in the banner. And let me know what you think about this inflation situation. Do you think it's going to just fade away and everything's going to be fine? Or do you think we're just going to continue seeing inflation just roar over the next 6 months, a year, 2 years, 5 years? Drop below. Let's talk about it. Catch you guys in the next one.